everyone, welcome back to Globecast. I'm so happy to have you guys around with us today. And I'm more than delighted to have Jason, who is the CEO, the founder of Venrai HQ. Welcome, Jason.
Thanks for having me on the show, Moonlight.
Thanks for, coming around and sharing, some of your personal journeys and maybe some of your insights in the crypto community. So, would you mind giving us a brief introduction of yourself?
Yeah, sure. So I founded Venrai 3 years ago, mainly targeting a niche in security auditing and crypto compliance. Now, back then, it was very clear that although the regulatory frameworks were far from finalized, a lot of crypto firms wanted to know that they were not breaking any regulatory requirements, any legal requirements. So more and more often we were being approached for advice on how to tackle different situations in the crypto sphere. So now we have built it out into a crypto compliance focused on mainly sanctions requirements, but also on AML and CTF requirements within the UK and EU spheres. But on sanctions, we also cover the US. So it's a small boutique firm, but we're highly specialized and we have some very well trained lawyers that support the operation.
Interesting. So, like you said, it's a small but boutique, compact team. And I mean, we talked about Venray. So now let's move on to your personal journey. So, what kind of brought you and what kind of drew you into the crypto community?
Right. So my background is banking. I started off my career a long time ago at Lehman Brothers, where I worked there pre and post administration. So I saw the bank that was too big to fail from the inside. So that was quite an experience. And I learned a lot from that. But even back then, I was looking at the way things were being done, like trades being punched through, all manually and leveraging of spreadsheets to calculate baskets of equities and other instruments. And I was thinking, my God, this is so backward. This is so so damn antiquated. These things have to move on over time. And yet, in my experience, then going to work for Deutsche Bank in Wall Street in New York, and then Deutsche Bank in London, and then moving on to an Italian banking institution, not a lot has changed. It is still very much a clunky operation when you need to push trades out and get them settled. You need middle office guys that validate the trades. You need back office guys that populate confirmations that go out to clients. So you've got inter-system reconciliations, you've got reporting to lots of authorities around the world. It's all incredibly operationally intensive. Now, this to me shows that there is a real need to change. And what we're seeing with crypto is that this is the digitalization event of financial services. It's like going from a CD player to Spotify. It's going to fundamentally change the way we transact in the modern world because it's elegant, it's beautiful, it's actually incredibly efficient considering how much value is being transacted. So when I first touched crypto back in 2017, I saw the potential for it, and I could not see any way in which banking would remain the same with this technology now available. And the great thing is, the longer I stay involved in crypto, the more innovation that comes, and the more use case and the more interest, not just within crypto geeks and the enthusiasts, but also with your traditional investors, and more so also with your big institutions who are now very much interested in how this is going to affect them and they're looking into how to best cater to client demand. But regulation needs to adapt and evolve, and over time, once those regulatory frameworks are clearer, we are going to see the bigger names start to delve into this, because if the regulatory frameworks are clearer, then there's less uncertainty, there's less risk for an institution. So for me, it was a natural progression, seeing how things needed to change all the way back in 2008. And then 3 years ago, seeing that, wait a second, there is already this technology, and now we can start leveraging off that. So it's no surprise at all to me how great this adoption has been in the past years, and it's only going to accelerate from here.
Interesting, brilliant. So you talked about like kind of how like Ward drew you into the community, and you were seeking for like a gap in the spectrum within traditional banking system. And you are still looking for maybe either the way out or maybe the route to, lead to further progression. And like you mentioned, it is a natural progression for you, to be going down this route, to be founding Venrai. And I think you briefly touched on the reason and the services you offered at Venrai. So would you want to expand further more on this?
Yeah, sure. So right now, we very much cater for a broad suite of potential clients across the various crypto asset sectors, but also across the various jurisdictions that have engaged in crypto, which is pretty much all the main jurisdictions you can think of. And we like to get involved from day one. Because if you're able to advise on incorporation, that is actually an incredibly important step when setting up a crypto startup, because different jurisdictions treat crypto assets in a very different way. So although we've got this decentralized, borderless technology, countries still have their specific treatment of crypto assets and blockchain technologies. And some are friendlier to crypto businesses than others. Now, I think that this will become better over time, but as it stands, certain jurisdictions are incredibly litigious, and it's very easy to see that with the US. The SEC is sanctioning, fining many different firms due to their non-compliant crypto asset behaviors. So there are certain jurisdictions which are better to start out of. And then, of course, once things evolve, there's nothing stopping a firm relocating, depending on the needs of potential investors or clients or whatever. So we like to get started from day one. And then from there, we start advising on how companies can get investment and how to get comfort over those potential investors by doing KYC, your AML checks, making sure that the proceeds that are coming into the company are known and don't need to be rejected because you don't want to face a certain party. Then you go on to the actual technology build out itself. Now, right now, the biggest buzz in crypto is DeFi and NFTs. And when you've got these decentralized platforms, your clients can potentially be from anywhere. So you need to be observing what are the requirements based on the jurisdictions that your clients are based. So here we advise on how best to navigate this emerging framework. And from there, our clients are in a better place to actually say that they are being compliant, perhaps in some cases on a best efforts basis, while regulation is catching up with the technology. But certainly, regardless of the firm, there's always going to be a compliance nexus that needs to be observed, and it needs to you need to have the controls in place to deal with these risks. Because if a regulator approaches a firm and starts questioning the practices in the firm, it can be game over for so many firms. So it's best to, from day one, think about compliance and build in your technology solutions, make them compliant by design. Yeah.
Impressive. So like if anyone, looking for any compliance advice or, to be advised on how to navigate and how to, like you said, sort out all the issues from day one, then feel free to contact Jason. And, we got all the social handles linked down below: Twitter, LinkedIn, Instagram. Get in touch with Venrai for the best solution possible. And you touched on briefly on KYC. So what is KYC and why is it so important?
So KYC stands for Know Your Customer or Know Your Client. So what this ultimately is doing is performing due diligence on those parties that you are transacting with. Now, day to day, if you walk, to a shop on the street and buy a Mars bar, you're not going to fill out forms and hand over your passport and so on. That's because it's such a small transaction. Because you've met the person and you've got no indication that the person is about to do something bad with that Mars bar, there's no problem in that transaction. But if you are accepting large amounts of funds over the internet and don't have already a relationship with a customer, you don't know who they are until you start validating who they are. And you validate this using, government issued, passports and driving licenses, all that. You run background checks on these customers to understand whether or not these are customers you want to face. There are higher risk jurisdictions, but in pretty much any jurisdiction, there are going to be bad actors that any platform will want to avoid. So in order to get that comfort on the proceeds that you are receiving, you need to do some due diligence. You need to know your customer. Very, very clever solutions that make this very, very easy to do. They're platforms where people are onboarded via the platform, and all the technical checks are carried out in the background. And that gives crypto asset firms a lot more comfort that they're doing the right thing and they're not facing bad actors in the space.
Thank you so much for talking us through, the importance and the necessity of, know your customer. And I realized that Venrai has just launched the official Chainlink node to make refined OFAC data available across many leading blockchains and providing a plug and play option for DeFi protocols. So what kind of impact has this action brought to the community?
So, upon the launch of the Chainlink Oracle, there was a huge amount of buzz from the Chainlink community. It was retweeted hundreds and not thousands of times, and people were creating lots of video content about the new technology that we've launched. So what we have seen as being a big gap in the DeFi space is the need to observe US sanctions requirements. In the real world, we maintain a database and we list out all of the sanctioned addresses in our database on an Amazon web server. So that's in the cloud. That's great. So anyone can go and plug into our API, obtain those addresses and perform due diligence before they transact with a potential client. That way they can avoid transacting or facilitating transactions with a sanctioned entity. So very, very important, especially if there's a US nexus to your operation. Now, this is all very great and easy, pretty much, if you're a centralized exchange or a centralized platform. But for DeFi, where there is no onboarding, there is no KYC inbuilt into a platform, the question is, how does a DeFi platform such as Uniswap get comfort that they're not facilitating sanctioned transactions? So what we've done is we've created a Chainlink node, which takes our OFAC sanctions data and pumps it out onto Ethereum mainnet and also Matic Polygon. So what this means is that DeFi platforms can now talk to our Chainlink node, get the information that they need on US OFAC sanctions, and prohibit transactions which are about to be committed between sanctioned entities. So this can revolutionize DeFi in making it more compliant. Now, right now, no corporate customer, no big institution is going to touch DeFi liquidity because it's completely unpoliced. It's completely out of control. It's just, great technology. It's really easy to use. But for someone that's an established institution or an established corporate, they don't want to take the risks of not knowing where they're getting their liquidity from. But the opportunity for the platform is demonstrating that they can be compliant with sanctions requirements and they can be more compliant. So that would lower the barrier of entry for bigger players into DeFi. And I think that would be incredibly exciting if we start seeing some big names enter into DeFi. So it's a next step in the evolution of DeFi. And I think it's only a matter of time before DeFi platforms start taking compliance very, very seriously. Yeah.
Indeed, it's just a matter of time, and it is really, indeed, really intriguing and exciting. And we are all looking forward to seeing more kind of big names, And like you mentioned, it is lower the barrier, the kind of removing all the potential obstacles and doubts of people not trusting where they got the liquidity from. So thanks so much for kind of offering this opportunity and opening this gate, like a brand new gate. For more opportunities. We've seen many kind of recent news that over a dozen of digital asset firms are now facing charges from the US CFTC as the country kind of ramps up crypto regulation efforts. And, many companies were accused of failing to register with regulation kind of regulatory agency. Do you have any kind of thoughts or comments on this as, someone who is so close to all the compliance and regulations?
It was inevitable. The US regulators want to be in control of this situation. There's a lot of new money coming into crypto. It's going to become a $5-10 trillion industry without a shadow of a doubt. It's only a matter of time. So with that amount of value at hand, the regulators cannot ignore it. And if they can't ignore it, they're going to be targeting firms and looking at how they fit into the existing regulatory frameworks, which are not fit for purpose, but at the same time, they cannot be ignored themselves. So it was inevitable that the regulators were going to come in and start investigating crypto firms and start sanctioning them. The question is how lenient the regulators are going to be with some of the firms that tried to do the right thing, but got it slightly wrong. My gut feel is that it's going to be a risk-based approach. If you've got a very, very successful crypto firm that has done very little in terms of monitoring their compliance of transactions, etc., then they're going to be hit hard by the regulators because there's no way around it. They have simply decided that they don't care about compliance, and their actions speak volumes to that. So that would be one end, one extreme. But then you may have smaller crypto firms that with a very, very minimal budget have put in some checks and balances to try and be compliant, but it's not quite to the standard that the regulator would have been expecting. Perhaps those firms will get a fine and told that they need to improve their controls and to avoid this happening again. But It's too early to say. The regulators in the US are really quite aggressive, and they will continue to want to make examples to avoid a continuation of non-compliant firms operating in the space. Yeah.
Is this kind of a similar case in the UK or maybe in Europe? And also, like you mentioned, you were working in the US, then also in an Italian banking firm. I believe you said so. So, like, do you spot any like differences? I mean, of course, there are like differences between traditional banking and crypto, but do you reckon that could be the similar case once there are more regulations or like just more procedures of like compliance in the UK or like in the European market?
Yeah. So, in the European markets, of course, there are very stringent regulations too. But each jurisdiction has regulators which take different approaches to how they regulate industry. So the US is renowned for being incredibly litigious, and the regulators over there, they really hit hard, and they, really send loud messages, and then that sends shockwaves throughout the industry, and that ultimately changes the industry because no one wants to be hit by a big fine or go to prison. No one wants to. So ultimately, it's then with the industry to evolve in consideration of what has happened involving the US regulators. Now, there are big fines in Europe, and the European regulators are very, very hot now on this space, but we've not seen the same level of regulatory intrusion as you would have seen in the US. In the UK, now that we've left the EU, there is scope for regulatory divergence. But in the UK, we've actually taken a very prohibitive action in that we've got a money laundering registration scheme whereby if a crypto firm wants to start operating in the UK, they first need to be registered with the FCA. Now, that's great if the turnaround in reviewing these applications was quick, but in some cases, this is taking years. So it's holding back firms from even starting an operation here in the UK. So that's a different sort of tact. The FCA wants to perform lots of due diligence on a crypto firm's money laundering compliance before they'll allow them to start operating. And once they're comfortable with the firm, then they're free to start. And that's all well and good. But roughly only 10 firms in the UK have actually gone through and been fully registered with the FCA under their crypto money laundering regime. And there's a backlog of hundreds of firms waiting the outcome. So that's putting off a lot of crypto businesses setting up shop here in the UK. I'm hoping that it improves over the coming months and years because there's been a lot of criticism over that backlog. But at the same time, the FCA will not want to drop its standards. So they probably need to start hiring a lot more very skilled professionals that understand the industry and are able to quickly get comfort on the operations as opposed to taking a very long time to assess each applicant. Yeah.
Thank you so much for like analyzing kind of the trend. And also I do believe that some people are kind of saying that regulations are putting kind of existential threat on crypto companies and stuff. Do you reckon this could be the case? This is kind of exaggerated, like this is not that serious?
I don't think that crypto firms are going away. I think now that we've seen such a huge amount of momentum, it's here to stay. The question is how it looks like in the years to come. Now, the big banks are all lobbying for proportionate regulation, which suits their needs. But in terms of lobbying on behalf of exchanges, custodians, and other perhaps smaller players in the crypto industry, there's not enough being done. Now, my fear on this is that the big institutions are going to get a regulatory framework which works very, very well for them, but that could preclude a lot of smaller crypto firms unless there's a regulatory framework which works for every company in the space. So a lot more needs to be done in lobbying for the right regulation. And if that lobbying is done effectively, then I think we're going to see a very, very prosperous and great industry flourish from here. All the smartest guys in the room are working in crypto. It's sexy, it's fast paced, and we're seeing the technology which is arising from this. I mean, it's incredible. Any traditional financial product in the future can be decentralized, operated in a DeFi way. And that will allow for a peerless, borderless financial system, which right now is not the case. But for this continued progress, there does need to be a lot more views harnessed from the industry themselves. Otherwise, yes, there could be some prohibitive regulation in the future. I mean, some jurisdictions have completely outlawed. Too early to say if the industry is going to face an existential crisis as a result of regulation. But I think it's clear that in most democracies, crypto is not becoming a dirty word anymore. It's becoming more and more accepted that it is the future of money. It's the future of financial services. And it's not something that is in the best interest of the average person on the street to block it. It's far more beneficial to let it thrive and promote financial inclusion than it is to currently just rely on legacy financial instruments, which obviously have led to a lot of people on the planet not getting access to modern financial products. Some people don't even have bank accounts, even in major economies. So there's a lot that needs to be done, and the benefits certainly outweigh the risks in total.
Yeah, indeed. Like you said, crypto is now the sexy, really hot kind of trending word of the year, of the world. And you mentioned that it is the future, which, kind of would take over all the really traditional financial services and system. And I believe that most people are getting to know crypto and willing to know more about it, and crypto society, crypto community is now more open-minded to welcome more, whether it's female participation or any kind of level of entry. Because I noticed that recently loads of celebrities have been joining crypto, followed up by how Elon Musk how he tweeted. I don't know if you have any kind of comment or thoughts on this, but I don't know whether this would cause a huge impact on the community, or whether this is something that could, lead into a positive outcome, or kind of stir up what's currently happening a bit.
Yeah, so, any sort of public endorsement and any sort of big figures such as Elon Musk chiming in on the crypto trend is great for the industry. It's, humans like to talk amongst themselves and gossip and talk to their friends as to what they've recently heard. And, we see memes on social media, and all this is just sharing of ideas and gossip, perhaps in a light-hearted way. But even if it's light-hearted, it leads to the conversation leading back to the underlying technology, which is crypto, blockchain. So with more people being intrigued by crypto assets, more people start using crypto assets, and more people start understanding the benefits of it. So this is all great, and it is fun keeping track of the latest celebrity trends. Mike Tyson has recently launched a set of NFTs, and recently asked on Twitter whether or not Ethereum is better than Solana, and he's asking his followers to vote on that. And you wouldn't expect an old school boxer to be deliberating on the future of technology. But it all keeps information fresh, and it helps bring a broader audience. It helps build up mass adoption of this emerging technology. I mean, a lot of traditional investors are now seeing this as already at that watershed moment where it could start being used in day-to-day transactions, as long as vendors and others are willing to accept digital assets. The barrier to entry is getting lower and lower. So yeah, celebrity endorsement is great. It's fun to track, and I think it helps promote the crypto asset landscape.
Yeah, definitely. I'd say like you mentioned, all the celebrity endorsement kind of brought something that's refreshing and a bit kind of fun, to the community. And with broader audience and more attention, it is definitely great for crypto to develop and to be introduced to like wider community. So like have you got any vision in mind for in terms of Venrai or like yourself in the next, in the rest of the year in the next following couple of years?
Yeah. So we already have announced, our new sanctions compliance technology, and we want to continue that trend. We want to be the go-to firm for observing sanctions compliance in the crypto asset space. So we will be pushing ahead with further developments that will support the growing need for that technology, because right now I'm not convinced that we have the right tools at our disposal in order to get comfort on digital asset transactions. So we're going to keep pushing ahead with this concept. And yes, our hope is that with our efforts, this will allow bigger players to start partaking in DeFi, which to me is as exciting as it gets.
It is very, very accelerating. So, is there anything else you would like to say to the audiences or to someone who might be potentially interested in, working with Venrai or working, with crypto, joining in the community? Is there anything, well, any advice, any insights you'd like to share with them?
Yeah, absolutely. So the main thing is that you have to do your own research. You have to look at the available materials that are out there on the web. I mean, there are lots of Medium articles. There are lots of books that you can get your teeth into. One I always recommend is Digital Gold by Nathaniel Popper. That's a great introduction to the history of crypto. And that helps build up that feeling that this is something big, and the momentum is there. And also get involved in social media, see what people are saying on social media, what are the latest projects, and start investigating what this is all about. But ultimately, people need to make their own decisions as to their risk tolerance, because crypto assets are volatile. And lots of people lose lots and lots of cash. And I'm not a financial advisor, so I can't give any financial advice. But people should tread carefully and first get comfort over very, very small transactions before they might move into something more meaningful. So do lots and lots of research. Talk to people that have a good understanding of crypto assets and how it all works. Leverage off that knowledge. And then when you're really comfortable, then start engaging in transactions and setting up wallets and stuff like that. But always be security focused. Never share your private seed phrase, and always be careful with who gets potential access to your crypto assets, because with crypto at present, you are your own bank. So you have to take security really seriously. But do plenty of research and get plugged in.
Thank you so much. That's so helpful. And if anyone's, having any questions, please do comment down below. Give us a follow, like this video. And also if you got any question for Jason, or if you want to, work with Venrai, don't hesitate to get in touch. All the social handles are below in the description box. And thanks so much for coming along and for joining us and sharing so many really, really meaningful insights and also kind of, your personal journey with us. Thanks so much again.
No, it's been a pleasure, Moonlight. It's been an absolute pleasure. Hope to speak to you again soon.
Okay, bye guys. Thanks for coming along and joining us today. Thank you.
Hope you enjoyed the video. And if you want any more information, feel free to follow me on Twitter at Venrai HQ, or to drop me an email at jason@venrai.com. I look forward to hearing more from all of you. Bye-bye.